events like the winter storm hitting Texas right now could pose new risks to municipal credit. Joining us now with his thoughts on how vulnerable localities can weather the impact, Tom Kozlik, head of municipal strategy and credit at Hilltop Securities. Tom, how much of a danger do these extreme weather events pose?
So while the financial impact from the Texas freeze is unlikely to reach the magnitude of what we saw in, say, Katrina or Superstorm Sandy or Harvey, it really reinforces the idea that governments need to prepare and that infrastructure assets need to be updated, I think. And in many of those weather situations, we've seen the federal government step in and act as a support or like a crutch for state and local governments and other public finance entities to the tune of, for Katrina, it was, 125 billion, Sandy, 60 billion some, but almost never are there payment defaults, and sometimes there are upgrades, but it really depends on the severity of the event.
But Tom, we're in really strange times now when my wonder is how much is the muni market depending on what happens with federal stimulus? I mean, there are so many state and local governments that are right on the edge right now with the lost revenue from businesses operating and so forth.
Yeah, the good news is that the budget shortfalls are not as bad as what most were predicting they would be towards the end of the summer. That being said, there are still budget shortfalls, and on the one hand, it depends. I mean, there is in some cases, in some state and local governments, and for different regions, they are worse than others. But overall, state revenues are down about 1% from March to December, and that is really going to more significantly impact areas like, the state of New York or New York City or some of the areas that shut down to a larger degree and for a larger or longer period of time.
Tom, how concerned should investors be about what's happening to credit markets overall? I mean, in the search for yield, there is such demand for debt that the rates that you're getting off of even junk are, really, really low. Are people thinking about these markets in the right way?
Yeah, that being said, it's interesting. I mean, and you mentioned in the preview that flows into municipal funds have been significant. I mean, over the last 8 weeks, we've seen an average of about $2 billion a week flow into municipal funds. And so I think that even going back to, the fact that at the end of the summer, we realized that the revenue shortfalls or the budget shortfalls were not going to be as severe. But there is going to be some ground that's going to need to be made up through relief from the federal government. We are still probably not at the point where we've described that as stimulus. I think that the money that's being talked about right now in Washington, that's still a relief. Maybe when they start talking about something more infrastructure focused, we could start describing that as something more stimulative.
So back to the risk question, how are you distinguishing between higher risk and lower risk localities, and how important is that now versus what it's been in the past?
Yeah, I think that one of the things that's happened is that the rating agencies have been pretty slow to downgrade state and local governments, partially because we don't know the extent of what credit deterioration is going to be. Health officials are now telling us there could be a fourth wave of infection or increases in COVID numbers in another, 4 to 14 weeks. That could make it even more difficult for state and local governments. But the fact of the matter is that if there is, $350 billion of relief that comes from the federal government for state and locals, that's going to go a long way.
Yeah, those ratings not quite able to keep up with reality in this fast-paced times. Tom, thank you. Tom Kozlik.
Thank you very much.
Shepard Smith here. Thanks for watching CNBC on YouTube.